Good afternoon, everyone, and thank you for joining us. My name is Jason Cogdell. I'm a benefits attorney for ProBenefits, and I'm here with my colleague, Chris McCauley, and we appreciate you joining us today. Greetings from our new office in Winston-Salem. Yesterday was our first day in a new office, and if you find yourself in the Winston-Salem area at any point, we would love to have you stop by and see us on Reynolda Road, just north of Wake Forest University in our great city. Hope all is well where you are. Thank you for joining us for the September edition of our client webinar series for 2015. Our topic today is ERISA. And candidly, the reason to talk about ERISA, which is a topic that we've addressed before, is that it continues to be a hot topic among employers. And it continues to be an area where there is some level of confusion or lack of education in the marketplace. And since the questions are among the questions that we receive most frequently regarding benefits compliance, we wanted to come to you with this topic. This will not be an overly long webinar, but we want to give you a refresher on key ERISA compliance basics to help you understand what ERISA is and what it is not, and to hopefully simplify what you need to do or don't need to do for your organization. We're also going to focus as part of the discussion on ERISA on SPDs, summary plan descriptions, and the summary plan descriptions that apply to, for instance, your group health plan, which you have a carrier booklet. What else, if anything, needs to be done from an SPD perspective? Also for your other plans, your tax benefit plans, such as premium only flex plans, flexible spending account plans, health reimbursement arrangements, and we'll talk a little bit about that today. And certainly we have designed this presentation to address questions frequently asked of us, but your questions are welcome as well. You can submit those through the question box at any time or email us later, and we'll do our best to address your questions. So as always, feel free to submit your questions. I hope you can hear me clearly right now. I was telling the group when we started, if you logged on a few minutes late, that if you have problems hearing at any point, make sure your speakers are turned all the way up, or in the audio portion of the control panel on the right side of your screen, there's an option to click the telephone option and dial in. So thanks for joining us today. We'll get started. I thought a place to start today would be with a word of context, a broad context about this topic. First of all, and importantly, the ERISA rules have not changed. They effectively are today what they were 5 years ago, 10 years ago. ERISA itself has not changed. A lot has changed around ERISA. And without question, we are living in what I have called the compliance era of benefits, because not only the Affordable Care Act, which is now 5.5 years old, but significant HIPAA regulations that started in 2006 and have continued for the past 9 years, and the not only the new legislation on both of those topics, but also the enforcement efforts of the federal agencies on both of those topics have created a compliance era where we can all agree that compliance is a bigger deal today than it was 5 years ago or 10 years ago. So even though the ERISA rules are generally the same, they receive more attention, just like the other federal laws that affect benefit plans. Now, what is ERISA? ERISA, which coincidentally stands for the Employee Retirement Income and Security Act. It was passed in 1976, and it governs all employer-sponsored benefit plans, retirement plans on one side and health and welfare plans on the other side. Now, one thing that we hear all the time, Chris and I hear all the time from employers, typically they're asking if this is true, is that they've heard some presentation from some group trying to sell them $2,000, $3,000 a year compliance service, that health and welfare benefit plan audits are increasing, and some company in Utah just got hit with a $1.5 million fine. Most of those claims, candidly, are overblown. The number of health and welfare benefit plan audits, is roughly the same in 2015 as it was 5 years ago. Most audits are of retirement plans. There are group health plan audits and IRS audits of benefit plans, but they are not very frequent, and random audits are very unlikely. Most audits are triggered by a COBRA complaint, a deficiency in Form 5500 reporting, a discrimination complaint, a situation where a retirement plan has had an issue in an audit, and so the Department of Labor then audits the group health plan in addition to the retirement plan. So it is not true that the chances of your organization being audited have increased for no reason at all. I strongly disagree with that. And the companies that want to scare you into paying for a certain service. I don't agree with that approach. We corporately do not agree with that approach. What we want to do is help educate you on what you need to do and what you don't need to do. And if there's something that you need that we can assist with, we will. But hopefully part of this is just simplifying what is required and what is not required. Certainly there are best practices, and certainly those of you that are very conservative and want to make sure to dot all the I's and cross all the T's, we want to help you do that. But this is also a practical discussion as well of the rules and some practical ways that you can ensure that your organization is in compliance. And with that, I'm going to turn it over to Chris, who's going to start with a refresher of some of the general rules of ERISA as we lead into some of the specific SPD issues.
Thanks, Jason. And again, welcome to everyone out there that's joining us today. Before we get into which rules actually apply to ERISA plans, I think it's important to figure out what exactly are the ERISA plans. So which of the benefits that you're offering to your employees are covered by ERISA. And listed here in the first 3 bullet points are the 3 main elements of an ERISA plan. If the answer to each of these questions is yes, then ERISA applies and all of ERISA's rules apply. So the first element is there actually a plan? And chances are if you're offering benefits, then the answer to this question is yes. Any ongoing scheme offering benefits is likely a plan. One example that may not be a plan that I can think of is maybe a one-time severance payment to a terminated employee. But anytime there's an ongoing scheme offering benefits, chances are there is a plan. The second question is whether the plan is established or maintained by the employer. So is the employer actively involved in offering a plan? And again, generally for the main benefits that are offered, the answer to this question is usually yes. This is one element though where we can talk about potentially some plans that meet ERISA's voluntary exception that may not be subject to ERISA. So for some side benefits, say you offer an ancillary accident plan, if the employer's involvement in the plan is limited to allowing the carrier to advertise the benefits, collecting the premiums from the participants and remitting them to the carrier, then potentially the plan could meet ERISA's voluntary safe harbor and an exemption from ERISA. If the employer is involved any more than beyond those 3 specific items, for instance, if the employer allows employees to pre-tax the premiums, if there's a group contract rather than individual contracts, or if the employer is actively involved in promoting the benefit, then probably the employer has done enough to establish or maintain the plan. But again, the main benefits that are offered, medical, dental, life, those are generally established or maintained by the employer. And then finally, the last element, if the answer to the first 2 questions is yes, then the question becomes, is this a type of benefit that is listed under ERISA? And we're going to get to those benefits that are listed on the next slide. But if the answer to all 3 of these questions is yes, then ERISA applies. We know ERISA's rules apply. If ERISA applies, then potentially other related laws may apply, COBRA or HIPAA. The only real full exemptions from ERISA are church entities and government entities. Those 2 benefits offered by those entities are fully exempt from ERISA and all of ERISA's requirements. Again, the third element of whether ERISA applies is whether the benefit is the type of benefit that is listed in ERISA. These are common benefits that are subject to ERISA. I'm not going to go through all of these. Obviously, the ones at the top are the more common benefits that are offered, health, dental, vision. I think it's just important to note the ones at the bottom that may be ERISA, that may apply to ERISA may apply to. So just think of all the benefits you offer, not just the major benefits, potentially wellness programs if medical benefits are offered, potentially EAPs, employee assistance programs, business travel, accident insurance, hospital indemnity coverage. Think of all the benefits you have, and if you have any questions whether any benefits are subject to ERISA that you offer, certainly let us know and we can help out.
Chris, just as a quick supplement to your point, when we talk about best practices for your organization in terms of compliance, one of the suggestions that we make to employers is that assuming that you are setting aside some time, or that you may be interested in as a best practice, setting aside some time to do an annual compliance review, which I don't think would necessarily be a very cumbersome, time-consuming, expensive process. It should be relatively simple. One of our recommendations is to at least one time annually, or if not annually, every 2 years, literally make a list of every benefit that is provided to the employees of your organization, ranging from the snack cabinet at work or a free t-shirt giveaway all the way up to the group health insurance and retirement plans. And for each of those benefits, list them all. And then beside them, does ERISA apply? Yes or no? Are we handling these benefits correctly from a tax perspective? And address each of those issues. And again, ERISA would also implicate COBRA. So kind of, does ERISA apply? Does COBRA apply? Does HIPAA apply to these benefits? Yes or no? To a lot of them, the answer will be no. To some of them, the answer will be yes. And then making sure that you're handling these benefits correct from a tax perspective. I think that's invaluable, not only because it will help confirm that you are on track with compliance, but also it would help you identify any issue that may be incorrect and something that you've been doing incorrectly maybe for a few years and just didn't know it. And so that's something that we would recommend.
Thanks, Jason. Once we have determined that ERISA applies to a particular benefit, then of course the question becomes, okay, what do we need to do? What does ERISA require? And so on this slide is listed the primary components of ERISA compliance. First are claim and appeals guidelines. So there are guidelines in place to address how to handle claims from participants. So a participant submits a claim. Is that claim going to be denied or accepted? If it is denied, then what are the appeals procedures that are required to give the participant the opportunity to appeal? And how is that appeal process going to be handled? Generally, for many of the fully insured plans that you're offering, this component, the claims and appeals guidelines, much of the responsibility falls on the carrier to get the claims and handle the claims properly. Another primary component is fiduciary responsibility. A lot of this component is really common sense. The plan assets, the employee contributions that are part of the plan need to be used for the sole benefit of employees. So plan assets can't be used for the benefit of the employer. They can't be used to pay the bills of the employer. The plan administrator, the employer sponsor, needs to use the plan assets, employee contributions for the sole benefit of providing benefits to employees. The next two components we're going to talk about, so I'm not going to talk about them on this slide, reporting and plan documents. And then of course, if ERISA applies, COBRA, continuation coverage, may apply for group health plans, and also HIPAA's portability, privacy, security rules may also apply as well for group health plans. So those are the primary components of ERISA, the main compliance requirements. So I just want to talk about briefly first the reporting requirement of ERISA, which is Form 5500. We have done a full webinar presentation on 5500 reporting, so you can go to our website and find the full presentation if you'd like. So I'm just going to talk briefly an overview here. Form 5500s are required for all ERISA plans with 100 or more participants on the first day of the plan year. Most small plans are exempt from ERISA's 5500 requirement. So a fully insured plan under 100 participants, or a self-funded plan that pays that reimburses out of general assets are exempt from the 5,500 requirement. So generally only plans 100 or more on the first day of the plan year need to file a 5,500. And those forms are due to be filed by the end of the 7th month after the plan year ends, the last day of the 7th month after the plan year ends. So a plan that began March 1st, 2014, it ended the end of February 2015 is then due 7 months later, the last day of the 7th month after the plan ends, which in this case would be September 30th of 2015. And all filings are done through the DOL's eFast online database. Just one brief slide about the mechanics of 5,500 reporting. Generally, the default is that all ERISA plans need to file their own 5,500. So if you offer 5 different benefits, they're all their own ERISA plans, then each of those benefits needs to file a 5,500. Now there is the option, plans do have the option to implement what's known as a consolidated wrap plan. That would be a wrap SPD that combines all the plans into one single ERISA plan, and a plan document is required to do this. So if you do have a plan document that is a consolidated wrap SPD, you can file a single 5,500 for that one large ERISA plan. But generally the default without the consolidated wrap plan is that each ERISA plan files its own 5,500. Once 5,500 is filed, the summary annual report is another requirement. It is simply a summary of the 5,500, and it is distributed to participants to provide them a brief summary of the 5,500 filing. And then finally, one thing that we help employers out a lot with is the Delinquent Filer Voluntary Compliance Program. This program is essentially a way for employers who have failed to file a 5,500 in the past when they should have to put their hand up, tell the DOL that we made a mistake, we didn't file the 5,500 when we were supposed to. We're going to go ahead and file the 5,500 now, and if you go through that program, the Delinquent Filer Program, the DOL allows you to pay reduced penalties. So smaller, if you file through the Delinquent Filer, you pay reduced penalties than what you would pay if, say, the DOL audited you, realized you hadn't paid the 5,500, then the full statutory penalty could apply, which are much larger than the penalties that you can pay under the Delinquent Filer Program. So that was just 2 quick slides about the main reporting requirement, 5,500. Now I want to talk about the plan document requirements of ERISA. ERISA requires that all plans be established pursuant to a written plan document. So in order to have a plan, you need a plan document that sets up the plan. And that plan document needs to be adopted by the employer so that you can say to the DOL, look, we have a plan, we have set it up with this plan document. Not only do you have to have a plan document to set up the plan, but you also need to have a summary plan description that gets distributed to participants. So the SPD is meant to provide participants with a description of their rights and responsibilities under the plan. And ERISA has specific requirements about what must be in the SPD, and there are 33 specific required items. And then that SPD gets distributed to all active participants. I think one thing to note here is you may be questioning whether you have an SPD for your plan. If you don't know that you have an SPD, generally what most employers, especially small plans, are relying on to act as the SPD are the carrier booklets. So if you don't have a specific SPD, but you have carrier booklets from the carriers that describe the benefits that you then provide to the participants, those carrier booklets are basically acting as your SPD. The carrier booklets are generally pretty good. They generally have anywhere from 25 to 28 of the specific items listed in ERISA, but again, they are not fully compliant. They generally do not have all 33 specific items. And that is where we move into the concept of a WRAP SPD. Since those carrier booklets only have 27, 28 of the required items, what a WRAP SPD is it's an additional document that supplements the carrier booklets. It basically sits on top of the carrier booklets and supplements the booklets with the additional items that are missing from the carrier booklets, the additional items that of the 33 that are not included in the carrier booklet. And sometimes it also goes beyond those missing items and elaborates on some of the specific items to be more clear for employees. So that is the concept of a WRAP SPD. It supplements the carrier booklets. There's also again, we talked about consolidated WRAP SPDs. The WRAP SPDs sort of supplement each individual benefit. The consolidated WRAP SPD supplements the individual benefits and wraps all the benefits into one ERISA plan.
Chris, a couple of questions. First, can you give, you mentioned a moment ago that the carrier booklet typically has 25 to 28 of the required 33 items. Can you give an example or several examples of some of the items that the carrier booklet may not have that ERISA requires?
Yes, surprisingly for many employers, the carrier booklets often leave out what the employers may consider the easiest of the items, the plan name, the plan number, the address of the plan administrator, the agent of the employer for service of legal process. And the reason generally for that is that the carrier just doesn't have that information. The carrier is providing a description of the benefits, which they know very well, but they may not have information about the specific plan name and plan number, that type of information.
Okay. Is there, for an employer that wants to see a list of the 33 required items, is that something that we can provide?
Yes, we have a list, and upon request, we can provide it to anyone that is interested.
Jason, again, one of the considerations here for those of you that are employers, or we've got some advisors on the session as well, you know that with the carrier, oftentimes when you're setting up a new plan or doing enrollment, re-enrollment with a carrier, you'll get the plan data questionnaire from the carrier, and typically a question, whether it's the group health plan or it may be a group term life plan or a long-term disability plan, the carrier form may have a box on it that says, is this an ERISA plan? Well, generally speaking, the answer is always yes. That if it's a group sponsored plan, then ERISA applies. The key here though is it doesn't really matter what the carrier thinks. The carrier is not subject to ERISA, only the employer is. So the carrier is really not taking on any responsibility. They don't even really need to know whether ERISA applies. But the reason to check the box yes is that if it does matter, if it matters in their claims and appeals process, we want them to know it's an ERISA plan. You got to follow the claims and appeals process as outlined by ERISA. And if the carrier is providing a booklet, the participant booklet, we want any ERISA information that's in the booklet would be helpful. That helps us get closer to the list of 33. Now, practically, as you're asking yourselves based on your specific organization size and the complexity of your benefit programs, do we need a WRAP? Well, you may or may not need a WRAP. I mean, technically, every employer needs to meet the list of 33. Practically, some groups, especially small groups that are somewhat unlikely to be audited, can rely on the carrier booklet. If you're audited, provide the carrier booklet as your SPD. The Department of Labor would point out the deficiencies, but there probably wouldn't be any significant financial penalty associated with, for instance, having 29 of the 33 required items. The DOL would just ask you to supplement your carrier booklet, add the additional 4 items, and all would be good. And I've been involved in some audits where that was the case. The larger you are, the more likely you are to be audited. But all of us should keep in mind that in the event of a benefit plan audit, Question number 1, the current standard audit letter. And if anybody wants to see a sample audit letter, we can share it with you, what it looks, the 2015 version, what it looks like. But question number 1 now and for the past 10 years has been provide your plan, a copy of your plan document and SPD that was enforced for the years blank to blank. So the SPD is the primary consideration in any benefit plan audit, because one of the things, for example, if you were audited by the Department of Labor, they want to make sure that the plan is being administered consistently with what the written plan says. So those are just some practical considerations. Does every employer need a wrap? Technically, yes, unless the booklet meets all of the list of 33. And for some of you, you may have a self-funded plan. Your booklet may meet nearly all the list of 33. But practically, it's a different discussion based on your size, the number of benefit plans you have. But these are the general rules that apply.
Thanks, Jason, for adding that extra context. In response to the demand and some questions we have received regarding wrap documents and whether ProBenefits provides wrap documents, we have developed an SPD wrap solution that may be helpful to your plan. It is a customized advanced template model. I guess I would say it's template in name only, really. The employer doesn't have to populate the form. It is drafted by benefits attorneys and is designed to supplement the carrier booklets as we described to satisfy the 33 SPD requirements. So if you are interested, the process basically is as follows. We at ProBenefits will gather data from the plan provided either by the employer or the broker who's ever in the best position to provide that information, and then the benefits attorney, Jason, or I at ProBenefits, we conduct a general ERISA analysis of the benefits plans. We then populate the SPD with the collected data and provide a draft to the employer with instructions for adoption and distribution. So really it's a template only in name. We draft the SPD with the populate the data, so the employer does not need to do any of the drafting. They do need to, of course, review the draft that we provide, and we're happy to assist with any revisions prior to adoption. I think one important thing to note is oftentimes a wrap SPD is compared to a 125 SPD in terms of the need to have one. You have to have one, but I think it's more important that if you have a wrap SPD, that it's well drafted. I think that's more important for a wrap SPD than for a 125 SPD, and the reason for that is the 125 SPD is basically describing the rights and responsibilities of participants in terms of pre-taxation of their benefits, whether they can pay for their premiums pre-tax. But the wrap SPD is actually describing their rights and responsibilities of the component benefits. So what benefits apply, who is eligible for the benefits, and so I think that it's more important that a wrap SPD is what really well drafted.
Chris, good thoughts there. I want to add a brief word of context here for employers and advisors on the call. First is that really the main reason that's driving us having this advanced template option is demand. We currently work with several hundred employers in various locations on Form 5500 reporting. That 5500 reporting uncovers the need to have wraps in certain circumstances. One quick example, an employer that's filing one Form 5500 but doesn't have a wrap SPD that has formally consolidated all of its benefit plans has got to have one. There is not a maybe best practice. It's an absolute necessity. And that would be one example of many where there's a Form 5500 crossover, because the Form 5500 has to be consistent with the wrap SPD. Also, employers of all sizes in this compliance era have been coming to us because we focus on compliance. Chris and I are attorneys, but ProBenefits as a corporate entity cannot practice law. So the best we can do as a compliance company that's not a law firm is provide this template. It's called a template, as Chris said. It's really a customized advanced document. The standard fee for template SPD, including all the work involved, is $500. So our goal is not to necessarily make a lot of money off that service, but just provide an option. Certainly, employers have the option of getting a benefits attorney to draft a RAP. That would be option one. Certainly, if you have a RAP that just needs to be updated, that you may not need us. We're not saying you need us to do this. We're just saying if you need a RAP, if you need assistance from us, this is the option we've got to provide, and we think this is an efficient way to handle it. Chris, moving forward.
Yeah, I think the last point I just want to make, or this last slide, is that SPDs are not only required. Yeah, you can go on to the next slide, Jason. SPDs are required not only just for your large ERISA plans that we listed, but also your 125 plan and your Flex and HRA plans, which are medical plans, so therefore they are ERISA plans. So SPDs, ERISA and IRS rules also require SPDs for the 125 plan, your flexible spending account, and your Section 105 plans or your HRA plans. And we talk a lot about this requirement. We've done several webinar presentations on SPDs for these plans, but I just wanted to make a note of some of the common changes that you may see at your upcoming renewal, because even if you have an SPD, if there are plan changes, it should be updated to give participants an accurate view of how the plan is administered. So these are just a few of the common plan changes that you may need an updated SPD for your Flex or HRA plans at your upcoming renewal. New Section 125 qualifying events for Marketplace open enrollment. Those new qualifying events were implemented last year, but if you want to start allowing them now, then go ahead and update your plan SPDs. We at ProBenefits drafted the SPDs for your 125 and your Flex plans to already include Marketplace open enrollment as a qualifying event, so it's not an update that is needed if you are a ProBenefits client. The definition of spouse to include same-sex couples may need to be updated. Plan renewal date changes. If your plan renewed 1/1 and now you're going to renew 12/1, the plan year is listed in the SPD, so that should be updated. Any addition or reduction of benefits that are being offered should be updated in the SPD. Eligibility changes, if you're changing your waiting period from 90 days to 60 days, that's also included in your SPD. And then finally, any specific design changes. If you're going to offer an FSA credit, and that should be included in your FSA SPD. And also, if you are still considering the health FSA carryover and you want to implement that, that's another plan design change that should be updated in your SPD. If you're a ProBenefits client and you have any questions of whether a change is needed to the SPD, or you know that a change is needed to your SPD, go ahead and contact your administrator and just let them know, and if a change is needed, we can provide you with an updated SPD. And then finally, if you don't have a 125 plan or a 105 HRA and you're interested, we can assist you at ProBenefits as well.
Thanks, Chris. Good job with that. In the interest of time, we're going to go ahead and wrap up now. If you have a question that has not been answered yet, hang around for just a moment and we'll answer it through the question box. If you have a separate question you want to ask after the webinar, you're welcome to email Chris at Christopher@ProBenefits.com. Here is a slide on some resources related to ERISA in general, Form 5500s specifically, and if you would like some additional written material on any topic we've referenced today or not referenced today, we'll be happy to share with you, including copies of sample employer audit letters, the list of 33 required items for an SPD, and other matters. Again, thank you for joining us. We're going to provide you with a copy of the recording session of the session today in YouTube format if it would be helpful to any member of your team that did not attend today. The slides are also available, and we appreciate you joining us. Best wishes for a great day today and a great week, and we'll be in touch soon.